Okay, so in our previous session, the last thing we were looking at, we did look at audit risk and the auditor's response, which is a big area that I would want you to love, an area that I would want you to practice a lot. So today we are going to move on and introduce a new area. So today we are going to talk about controls, one big area as well. So we have audit risk and auditors' responses. Another key area is being able to conduct the test of controls. So let's first of all understand what are internal controls. So the topic for today is internal controls. So internal controls. So if we are looking at internal controls of an organization, internal controls, these are systems put in place by the organization which are meant to prevent errors and fraud. So we have those charged with the governance, the managers of an organization, we have the leaders of an organization, those who are charged with governance, those who are supposed to run the organization. So those charged with the governance, the leaders of the organizations, they are supposed to create a system which prevents errors and fraud from taking place, which we call the internal control system. So the internal controls, these are systems put in place by the organization which prevent errors and fraud. These are systems put in place by the organization which prevent errors and fraud. These systems are designed, or we can say it is the responsibility of those charged in governance, those charged with governance, to design the systems. It is the responsibility of those charged with governance, those that manage the company. It is the responsibility of those charged with governance. It is the responsibility of those charged with governance. To ensure that the organization has sound controls in place. To ensure that the organization has good controls in place. To ensure that the organization has designed systems that prevent errors and fraud. So it is the responsibility of those charged with governance to ensure that they've designed ways to prevent errors and fraud. So as an auditor, you assess the internal controls of the client. You come to an organization, you need to first of all analyze the internal controls. If the controls are weak, it can show you that there are high chances that errors and fraud is taking place. In the presence of strong controls, chances of errors and fraud taking place are reduced. So if you come to an organization, you need to assess their internal control position. This can tell you if the controls are working well or if there are weaknesses in their control system. So when you are analyzing the controls, there is what we call the control environment. So we can say, let's say there are components. Let's say if you're analyzing the internal controls, which components do you see in the client's control system? So we have the components of the control environment, of internal controls, which are also found in business and technology if you did part 1. So the components of the internal controls. So in the internal controls of a company, we have, number 1, the control environment. So if you are looking at the control system of a client, we have what you call the control environment. What is this control environment? The control environment, we are looking at the attitude. This looks at the attitude of the management towards the control system. So if the managers are people that want to make sure there is order in the organization, if the managers are people that make sure the controls are working, then we have a strong control environment. So the attitude of management or those charged with governance determine the type of controls we are going to find in an organization. If the organization is controlled by managers who don't care about an environment where there are good controls, we can say there's a weak environment. So in the presence of a weak control environment, there are also going to be weak controls. Those that lead the organization, they create the control environment. So the control environment is looking at the attitude that the management has towards the control. If the organization has a good control environment, then it means that the leaders have a positive attitude towards the controls. Besides the control environment, so you're an auditor, you want to understand the internal controls in the organization. First of all, understand the attitude of the management towards the control systems. Number 2, you may need to understand as well, besides their attitude, you may need to understand the risk assessment processes. So besides the control environment, you need to understand the risk assessment processes. So the risk assessment process, as an auditor, you need to understand how does the organization identify risk? In their systems, how do they pick if risk is taking place? How do they pick if there are errors taking place? So the risk assessment process, we are looking at the ways that the organization uses to identify risk and how they address those risks. So the risk assessment process, this looks at the ways used by the entity to identify the risk and address those risks. As an organization, do we have any way that we use to identify where things are going wrong. So the risk assessment process, the auditor needs to evaluate the company's risk assessment process, the way that they use to identify risk. We need to look at the way that they use, and we evaluate to see whether that way has some weaknesses or loopholes in it or not. So you are looking at the client's control in the client's internal controls. You need to understand their control environment, the attitude of management towards controls. You need to understand the ways they are using to identify risk and how they are addressing the risks. That is the risk assessment process. You need also to understand, besides the risk assessment process, you need to understand the information system and communication. So the information system and communication. So the information system and communication, what does it look at? So we have the information system and communication. The information system and communication, this involves the auditor understanding how information is shared and how, we can say, how communication is done. This requires, if the auditor is analyzing the information system and communication, this requires the auditor to understand how information is being reported. In the organization is being prepared and reported. So if we are analyzing the information system as an auditor, you are checking how in the organization do they record the information and how do they communicate the information. So the risk assessment process is the ways they use to identify risk. The information system is how do they record things in the organization. So the auditor has to understand, they want to understand the control systems of the client. They should understand the control environment. They should understand the risk assessment process. They should understand the information and communication systems. They should also understand the control activities. So the control activities, these are ways the organization is using to identify controls that are not working or to identify fraud and error. So the control activities, these are the various activities which help. The control activities, these are various activities which help to prevent or detect errors and fraud. How do they detect errors and fraud? So they can say, we prepare reconciliations. They can say we have a guard, we have authorization. So how do you, as an organization, detect when things are not going the proper way? So if you're analyzing the control system of the client, you need to understand their activities that they engage in to identify where the controls are not working well. Then lastly, we have monitoring and evaluation. So in the control system, there should be ways to monitor the effectiveness of the control systems. And these must identify weak controls and give room for better controls to be designed. So monitoring and evaluation, if you are talking about monitoring and evaluation, we are talking about the ways we can use to identify weak controls, identify and improve the performance of weak controls. So you are an auditor today. You want to understand the control environment of the client. In the control environment, remember what are controls? These are the systems that they use to prevent, detect fraud. So you need to understand in that system, there should be a control environment. There should be a risk assessment process. There's an information and communication system. There are control activities. There's monitoring and evaluation if the system is working well. So as an auditor, you have been hired to conduct an audit of a certain company. Before you start auditing, you analyze their control system. If the control system is weak, if there are weaknesses in their system, there are weaknesses in their reporting system, there are weaknesses in their control activities, there are weaknesses in their risk assessment process, then it can tell you that there's a disaster. So if you're auditing a company and there are weaknesses in a lot of areas in their control systems, there are high chances that what they've reported is wrong. So before you go to the client's system to audit in detail, you might first of all analyze their control environment. This can help us determine the team that we are supposed to go with. This can help us determine which areas we need to dig deep. So once you visit so you can say the auditor has to first analyze the control environment. The auditor has to first analyze the control environment. A weak control, an organization with weak controls gives room for more errors and fraud. If the auditor identifies that there are weak controls in the organization that they are going to audit. If the auditors identifies that there are weak controls in the organization that they are to audit, they are supposed to increase their procedures. So if the controls are not working well, there is a control risk. Remember we said audit risk is caused by what? When we did audit risk, we said audit risk is a risk that the auditor gives a wrong opinion because of either control risk, detection risk, or inherent risk. And we said that under control risk, it is the risk that the auditor believed the control systems which were not working well. It is the risk associated with the control systems that the client is using. So what am I saying here? If you are an auditor and you evaluate the client's control systems and you realize that these control systems have loopholes, these control systems they have gaps in them, you need to increase your procedures. You need to dig deeper. So when you are now conducting your detailed audit, you need more procedures because there are high chances of errors and fraud in an organization where there are weak controls. So the first thing that you do, you need to document the client's control system. So you need to document the client's control system. If you're documenting the client's control system, you are studying the controls that are present in the client's system and you write them down. So if you're documenting the client's control system, it involves studying the controls which are present in the client's controls and you jot them down. So which are the ways you can use? So if you are documenting the client's control system, there are ways you can use to document the client's control system. So if you are documenting the client's control system, you can use what we call the narrative notes. So you are studying the control system of the client. If you are studying the controls that are present in the client's system, you can use the narrative notes. So the narrative notes So we have the narrative notes. So for the narrative notes, these are short notes. That describe the controls present in the client's system. So the narrative notes, these are short notes that will be explaining which controls are present in the client's system. So if you're looking at the narrative notes, these are short notes. So you are studying the client's system. You can write in short the controls which are present in your client's system. The client has a guard that prevents inventory from being stolen. The client is an authorization system where if goods are going out of the inventory, out of the warehouse, they have to be authorized by the warehouse manager. So you are writing the systems that are there in the client's, the control systems that are with the client that prevent errors and fraud. Then these narrative notes, they are good because they are easy to understand. If we are to go and audit with juniors, they can easily read the narrative notes to see which systems are there within the client. Besides the narrative notes, we have flow chart diagrams. These show all the controls present in the client's business on one diagram. So the flowchart diagram, it's a diagram that shows all the controls present in the client system. So it's showing the organization on one is a chart on one diagram and the controls which are present. So the person auditing can visualize the organization as a whole and see which controls are there in the various departments on one diagram. It's more like a map, which is showing the controls present within the organization. So if you are an auditor, you need to study the systems being used by the client, which are the controls, and you write them down. This will help you pick which controls are weak and which areas may have misstatements. So as you are assessing these controls, that's when you use these narrative notes, the flowchart diagrams. You can use the internal control questionnaires. So if you're using the internal control questionnaires, these you prepare questions for the client. So you prepare questions for the client. So when you come to the client's business, you'll be asking them, do you have a guard? Do you have cameras? Do you have, so you are asking the client to complete a questionnaire that you have pre-prepared questions. So the auditor prepares a questionnaire. Which they will give or they'll give the client to answer, or they can ask the client while he's putting the answers. So the idea behind, you are asking the client questions regarding their controls to see whether the control is there or not. So if it is the internal control questionnaire, there are questions that have been prepared. So for the internal control questionnaire, there are questions that have been prepared. That you are going to ask regarding that you are going to ask regarding the client's control system. Then we have an internal control evaluation questionnaire. So we have the internal control questionnaire and internal control evaluation. So this gives the client a chance to tell us the controls which are there. Because the questionnaire, if we prepare the questions, we might miss certain controls which are there. So the internal control evaluation questionnaire, this one, it gives the client a room to tell us. We can just ask them, which controls are there in inventory. Then they tell us which controls they have designed to make sure inventory is protected. So this gives the client room to mention the controls present. Because on our questionnaire, we might miss certain controls which the client has. Just remember, the controls are the ways to prevent fraud and error. So we might design the controls thinking of the organization that we're used to auditing, but the client can have their own control systems, which are not the same with those that we are used to. So the internal control evaluation questionnaire can give them room to also discuss certain controls which are not present in our system, but which we are not used to, but which the client has. Then let's move on. So after we've documented the client's control system, the next thing is to understand this system of the client, to see where are the weaknesses in that system. So we need to document the client's control system. After we've documented the client's control system, we need to understand where in the client's control system do we have weaknesses. There is need to identify which areas of the client's control system are there errors and mistakes. So after we've documented the client's control system, the next thing is to identify which areas have weaknesses in the client's control system. So for you to be able to, the question will start, this is where the questions will start from mostly. The questions will say, identify a control deficiency. So a control deficiency, they'll give you the system of the client. This is how they do this. Then they say, identify a control deficiency. A control deficiency is a weakness in the control system. The system of the client, there are weaknesses that are there, that if they're not careful, those weaknesses can result in errors and fraud. But I would like us to first of all understand a good, or we can say elements of a good control environment. Elements for us to be able to pick where there are weaknesses in the system. You must know good system first. You can be, once you know what is right, you can be able to pick where are the errors. So elements of some of the best, not all of them, are elements of a good control environment or elements of good control systems. So if we have good control systems, number one, there is segregation of duties. If we are saying that there is a good control system, there must be segregation of duties. We are saying the system that they're using is a good system. There must be segregation of duties. By segregation of duties, what do I mean? One person shouldn't be doing everything alone. Because once you leave one person to do everything alone, that person can commit fraud and you never get to see it. So we shouldn't leave one person with power to do everything. So segregation of duties, this requires one person to initiate and the other person to authorize a transaction. If one person is initiating and the other one is authorizing, how is this a benefit? This is a benefit because if the person initiating, if the person that is initiating makes an error, the one that is now going to authorize can see that an error was made. But the problem is, if it's one person doing it alone, they may not pick where they've made an error. The same goes with fraud. If one person is initiating and the other one is authorizing, if there is fraud, the one that is authorizing can easily pick that fraud was taking place. So segregation of duties. This requires one person to initiate and the other person to authorize. Or you can say this requires, one person should not do everything. If there is segregation of duties, one person should not be left to do everything. Besides segregation of duties, a good system that the client is using must have the right employees. So you can say a good recruitment policy. So by a good recruitment policy, I mean that only qualified people should be hired to conduct a task. So we should hire and engage only qualified personnel. Those that are competent for the job. If the organization is just hiring everyone, they just take, they don't even consider whether you are right for the job or not, they just hire. That will lead to a lot of errors and fraud. If maybe we are just hiring based on, if you are just hiring a circle of friends, not considering their ability or their skills, that can result in a lot of errors and fraud. So in a good system, we should recruit based on competence. Then also, if the system is a good system, there must be physical controls. So the physical controls, these are things we can see that protect the assets, that protect the resources of the organization. The physical controls For example, we have a guard, a security guard. It's a control that you can actually see. That's a physical control. We have cameras. We have locks. These are physical controls that protect the assets of the business. If it's a physical control, you can actually see it. It's a physical control. Besides the physical controls, if it's a good control system, there must be authorization. So what do I mean by authorization? So for authorization, I mean that the system must only allow authorized personnel to approve certain transactions. So it's not everyone who should be allowed to approve. There should be, juniors should not be given a position to authorize transactions. So juniors or we can say the authorization role must be left for the senior. The authorization task must be left for the senior. It must be the seniors that authorize the transactions. Then the juniors will be just given the role maybe to enter the transactions. But if it's issues that require judgmental, that requires judgment, the juniors are likely to make mistakes. So those issues that require authorization, that require maybe judgmental issues, those ones should be left for the seniors to decide. Size authorization. In a good environment, there should also be reconciliations. We should be reconciling with the bank. If the bank tells us this is what we have in your account, you should reconcile to agree their balances. If the suppliers tell you this is what you're owing, you should again agree. So an effective system must reconcile the balances with third parties. Must be reconciled. Regularly. So we need to reconcile these balances regularly so that we ensure that what they're telling us is the same with what we have in our books. If it's a good system, it must give room for recalculations. So if maybe we are using a manual system, once one is calculated, another has to recalculate. Or we can recalculate what a machine has done just to verify whether it is correct, it is calculated everything correctly. So you can just take a sample and recalculate. So this recalculation, this confirms, this ensures errors are identified in time. This gives that assurance that errors are identified in time. So these are some of the elements, not all, that we should find in a good control environment. So if they say that identify, so the first case, we can say case one. Identify a control deficiency or let's start by a key control. If you are required to identify a key control, what is it that you are looking for? So the question can say, identify a key control. So identify a key control. A key control is the main control system. Okay, we can say a key control is a main control given in the case that prevents errors and fraud. The main control given in the case that prevents errors and fraud. So for you to say this is a key control, it must be mentioned in the case. The key control identified must be mentioned in the case. The key control identified must be something that was in the case, mentioned in the case. So you read the case, you identify something that they are doing which prevents errors. So how do you give your key control? Presenting the key control. If you are presenting the key control, how do you present the key control? So if you are presenting the key control, you start with the indicator from the paragraph, from the case. So you start with your control indicator. If you are presenting your key control, you start with your control indicator. This is given. The control indicator is given in the case. So what is it? This is the situation given in the case that is indicating the control. The control indicator is the situation given in the case that is indicating the control. Then, besides the control indicator, we move on to, so besides the control indicator, we then move on to why. So we're still giving, the question says identify a key control. Give us the indicator, that is something that they're doing. I'll give you an example. Then after you've picked the control indicator, you tell us why is it a key control. This is where you get, this is the crucial part. Why is it a key control? That is, what is it capable of preventing? Why is it a key control? Or what is it capable of preventing? Why is it a key control? What is it capable of preventing? Let's say you are told in the case that KD Limited offers products on cash and also on credit basis. So we are offering products on cash and credit basis. Before a new credit customer is allowed credit, the finance director assess the credit history of the client and approves the credit. So we are selling on credit, but it is the finance director who is approving the credit. There's the finance director who is approving the credit. So this is a key control. We can say, the question then says identify key controls. So you start with your indicator. When you're now giving your key control, you start with your indicator. So you start with the indicator of the key control. So the indicator of the key control can say, for the indicator of the key control, we can say the credit limit or can say new customers, new credit customers are first approved by the finance director or maybe it could be a senior credit controller. So before they are given credit. So this one is an indicator, it's a control indicator. The next thing is to tell us, why are you saying this is a key control? So if you check authorization, the authorization must be left for seniors. So this is a senior who is authorizing the credits. So the authorization is a key control because the authorization is being done by a senior person, which reduces the chances of bad debts as credits are issued to deserving customers. So we are going to issue the credits only to those who deserve. If a junior is to do it, they might end up giving credit to someone who doesn't deserve to be given credit. And in turn, it can increase the chances of bad debts. It can increase the room of bad debts. So it's a key control. We've brought the indicator. We have also mentioned why we think there's a key control. Now, let's move on. So they can say identify a key control. That is the control system which the client has, which can help to prevent errors and fraud. Besides asking for the key control, they can also say from the client's control system, identify a control deficiency. Identify a control deficiency. If you are identifying a control deficiency is a weakness in the system of the client. So this is a weakness in the system of the client, which can potentially cause errors and misstatements. So if we are looking at a control deficiency, it's a weakness existing. It's a weakness that is existing in the client's box, sorry, in the client's system that can cause errors and fraud. When you are highlighting this deficiency, when highlighting the deficiency, start with the indicator, followed by why it is a deficiency. So you start with the indicator of the deficiency, followed by why do you think it is a deficiency? The why do you think it's a deficient part is supposed to talk about the effects that it is possibly going to cause in the financial statements. So when explaining why it is a deficiency. I highlight what it is capable of causing in the financial state. So tell us why you are saying it's a deficiency. What are the possible problems that can arise? Okay, let's move on. An example. ABC Limited ABC Limited operates with different departments. Operates with different departments. The payroll manager is also responsible for the recruitment. The payroll manager is also responsible for the recruitment of employees. The payroll manager is also responsible for the recruitment of employees. He verifies their working hours and approves payment at the end of each month. What do you think could be a problem? What do you think could be a problem with that system? Wilma, why do you think would be a problem?
I think there is no segregation of duties.
There is no segregation of duties. Terence, what do you think?
Yeah, I also think maybe there's no segregation of duties.
Yes, but what could be the effect of that? What could be the problem?
Maybe it may result maybe in, let's say, fraud.
Okay, let's put it this way. Yes, the issue is segregation of duties. So let me help you then with how do you put it up. So the problem, so remember you managed yes to pick. So I said a good system must have this. So the moment when we don't have this, it's a sign of a weakness. If we don't have segregation of duties, a poor recruitment policy, we have no physical controls, poor authorization being done, no reconciliations being done, that's a sign of a poor system. So in this case, a weakness or deficiency. So identifying the weakness or deficiency. The weakness or deficiency. So the first thing always, you start with the indicator. Always you start with the indicator. So our indicator in this case is, we're taking the indicator, which is something they've given us already. So the indicator would say the payroll manager is responsible for recruitment. Is responsible for recruitment and approval of working hours. This shows lack of segregation of duties as the segregation of duties resulting in or can say segregation of duties as the manager can create ghost employees. Can create ghost employees and approve their wrong and approve their working hours. They can create ghost work employees and approve them. Remember, they're the ones that are recruiting people. They will just say, there's an employee like this who doesn't exist in the company. And after they have created this ghost employee, they are the ones that will also approve the working hours of this employee. And they're the ones in the payroll, they will approve the payment. So that fraud might even go undetected. Why? Because we have given this payroll money. They are the ones that are responsible for the recruitment. They are also the ones responsible for making payments. That's dangerous. So the effect is that it can result in ghost employees that are being paid while it's not existing in the organization. They can then say, normally after the weaknesses, they will ask you to come up with control recommendations. They can say, come up with control recommendations. They can say, come up with control recommendations. So the control recommendations, the control recommendations. So the control recommendations are, the systems, or we can say these are the ways we recommend, these are the ways we recommend the company to use in order to improve on their weaknesses. So as an auditor, yes, you're allowed to provide a recommendation. Of course, you're not telling them what to do. You're just recommending. You can do this. You're just telling them the possibilities. You can come up with a control recommendation. So the recommendation is just telling them the possibilities, what they can possibly do. So the control recommendation, for the control recommendation, the recommendation should address the weakness you have identified. The recommendation should address the weakness identified. So if we are looking at a recommendation, the recommendation follows a weakness you have identified. So if the weakness was that, there's no segregation of duties. Your recommendation should be directing how that problem should be solved. So these controls are normally tested during the interim phase of the audit. Remember, for the audit, we have interim and final audit. So the interim is done before the year end. So the interim audit is actually done before the year end. So you can give them the recommendations during the year to say, okay, you think there's a weakness here, you need to work on it here. So during the final audit, we'll talk about testing those controls, whether there's been a change. So during the interim audit, we can provide them with a recommendation. The recommendation should also highlight who should do it. The recommendation, you don't just say someone must do it or they should segregate duties. Who should do that duty? So the recommendation must indicate who is the right person to carry out the responsibility. So it's not just about saying someone should do it. Who? Someone should recruit who? So let the recommendation specify. So for our recommendation from the weakness above, we can say, the organization needs to set up a human resource department and separate the job description of the human resource with the payroll department. The human resource manager should oversee the recruitment and selection and the payroll manager should verify the working hours. And approve payment. So that is the recommendation. Who has to do it? So the recommendation, let it address the weakness. Because they'll say, give us a control weakness. And at the same time, after the weakness, give us a recommendation. So your recommendation should be your recommendation should address the problems you have highlighted. Okay, so for today, I want you to go and read this part. I gave you something that I said you should attempt last week. I don't, for audit risk and response, there's a question we're doing that I said you should finish. Please make sure you don't relax. This subject is by no means easy. You need to practice. It sounds easy in the class, but you need to practice. So now over to you. Maybe are there questions before we close?